Welcome to the Show Me the Money podcast, Unlocking Property Finance. Join us on an exciting journey into the world of property finance, where we uncover secrets, strategies, and opportunities that can turn your property dreams into a lucrative reality. Welcome to Show Me the Money, Unlocking Property Finance.
Hi everybody, and welcome back to another episode of Show Me the Money, and your hosts as usual, myself, Sharma, London-based property investor and developer.
Hi everybody, my name's Marc. I am the Managing Director of Wharf Financial. We're specialist property finance brokers, and today we are joined by my old friend, or I shouldn't really say old friend.
Not that old.
Good friend. With plenty of youth in him, Avi Barr, and it's a pleasure to have you on with us, Avi. Do you want to tell everybody a little bit about your background, where you've been, what you've done, what you've seen?
Sure, thanks Mark, thanks Ro. Pleasure to be with you. Yes, very briefly, I'm a property lawyer. I help people who are generally buying or selling property, and it normally has a property finance element to it. So I see a lot of work with people who are bridging or taking out shorter term finance as well as long term finance. I'm a partner at BBS Law, and I help a huge amount of people up and down the country with a variety of different property assets, whether it's residential or commercial or mixed use development. So a broad range of, I would call it expertise, but certainly knowledge, which I'd be delighted to share with you over our chat this afternoon.
Excellent. Thank you so much for that, Avi. So, Avi, I can't remember when we first met. It was a long while ago now. But there's a definite skill set that you hold, which helps transactions move through the process more smoothly than some other solicitors. So are there any pearls of wisdom you may have for our listeners about what they can do to prepare themselves?
Yeah, it's interesting. I sometimes say to people that I think an advantage that I have is that I've invested in property and I've also lent money against property. So I really understand the touch points and the pressures, the challenges as they arise for the clients, and therefore perhaps I'm better placed than some to be able to help deal with those as they come along. I think ultimately, as long as you have the mindset that everybody there wants to get a deal done, and it's our job as lawyers to make sure that happens, obviously making sure that your clients are safe, whether they're lenders or borrowers, that's the key. It's the mindset of wanting to get the deals done, not sort of pushing back and seeing challenges as hurdles, but seeing them as something that needs to be sort of got round rather than a showstopper. So I think it's very much about mentality, and the more successful lawyers in this profession are the ones that really see the challenges but have the ideas and the scope of knowledge and experience to be able to navigate those and solve them.
It's interesting you mention about overcoming hurdles, because that's something that happens in most transactions, and we do see things on the legal side come up late on in the transaction, and a lot of the time people believe that's going to kill the deal completely. But like you said, it's about how you overcome these obstacles, and the more, I suppose, experienced and the more things that you've seen, the more chance there is that these types of things are going to be rectified.
Yeah, look, Mark, I've worked with you, as you say, for a while now, and what's always struck me on transactions that I've done with you is you're very well prepared. So by the time the deal comes through to the lawyer, there aren't really any surprises there that ought not to be there. There's always things that come out in the legal due diligence. But I think one of the most important things on any transaction is making sure there aren't surprises that could have been avoided. So, for example, on a purchase, if you've got a slightly unusual route of your funding coming in for the balance of the monies you're putting in, it's things like that that could really throw a deal off when you suddenly disclose the money's coming from an at-risk country or it's a gift. So I think it's very much about being open. In the good old days, maybe 10 years ago, kind of stuff got through. Maybe banks weren't diligent enough to spot, or lenders weren't diligent enough to spot kind of little gremlins that people put into the system. But now the systems are so robust and so rigorous. I mean, particularly since really, I suppose, the recovery from the credit crunch in 2011-12, we've seen a massive upward trend in the quality of due diligence that lenders are doing before they lend money. So be open, be upfront, and you'll save yourselves a hell of a lot of trouble and stress further down the line.
Yeah, and I totally agree with that. When I worked at a bank pre-credit crunch, there was less emphasis put on source of funds. The anti-money laundering checks weren't as diligent as you said. Really, up until after 2011-12, and one thing that we are seeing that winds customers up though is when there's anti-money laundering checks and proof of deposit needed, and the solicitor is doing the checks and the lender is doing the checks, so it sort of gets duplicated. So that's something that I know has been a grievance for some of our customers previously, and you can see why when two people are checking the same thing in essence.
Yeah, I mean, you're absolutely right. There's a whole bunch of stuff of that nature. I find there's so much duplication, for example, on insurance requirements, and there are different areas where, sadly, the systems are not yet as cohesive as they should be. And I'm sure, I mean, I do see it with I'm sure you see it the same, Ro, when you're borrowing money, and Marc, the better lenders that you work with do try and avoid that duplication. We were just talking offline about different lenders. The point is, the best ones are aware of the frustrations these things cause. As lawyers, we have a duty, as we're regulated, and we have to make sure that any money that's coming physically through our bank accounts is kind of ascertained, and we know what it is. So we don't have much choice. The only tip that I can share with you, which is quite successful, and we do this with a number of our brokers, is we encourage the brokers, all the clients, to package up their documents in a shared folder. They can use Dropbox or anything simple, so that they don't need to provide it twice. A shared folder, share it with the lender, share it with your lawyer, and hopefully that at least eases a bit of the pain. It won't completely sort of diminish completely the delays, but it will hopefully stop duplication of transfer of information, which I know really winds people up.
You are totally right with that, because what we do when we initially speak with the customer, so we have identified the need that's out there, we send the customer our forms that need to be filled out, and we send them a checklist of information that needs to be provided. I would say 75% of the time people just ignore the checklist and don't send the information, and it's almost like saying we don't need to provide this information at this point, because, well, actually I don't know why. Maybe Ro, as an investor, obviously you don't do this, you're in the 25% that provides a full suite of information, but as an investor, Ro, why do people not provide the information up front? What do they gain from not providing it?
Yeah, that's a good question. I can't speak for other people, but I can only imagine that they either haven't got their admin together, or maybe they are trying to hide something. Don't know. I think it's more, to be honest, it's more likely to be that people just don't realise what's needed, and they realise it's a real pain to get it all together, and they're hoping that no one's actually going to ask for it. But then obviously when they do, especially when it's at the further down the stage or further down the line, doing the transaction, when the pressure's really on, that's when they start to feel it. But I absolutely agree.
On that, Ro, I'm not a solicitor, and I don't profess to be anything close to a solicitor. However, I've done a lot of transactions, and I can spot things that solicitors often spot later down the line. So it would just help people so much more if the full suite of information was prepared, because we'll iron things out, and then we can pick up the phone to people like Avi and say, do you think this is going to be a deal killer from a legal perspective? And Avi's a friendly guy. He offers advice and helps us along with these things, and that's why you have a strong network to help, so we can help our customers help themselves.
There is another perspective as well, though, because quite often as an investor, as a developer, your main priority is to secure the deal, and quite often that comes before the money. And if you've got a good network, you know that at some point you'll get the money to get the deal over the line, but actually securing the deal is the most important thing. So sometimes genuinely up front, perhaps they don't actually have that information, or they don't really know who that investor is going to be that's going to be providing that equity portion for the transaction, and it's quite likely to be that the majority of the times when they just don't have the information, and then when they do need to have it, or I've got experience of this where an investor pulls out quite late through the transaction, at which stage then you need to replace them with somebody else, and then getting hold of all of that information for the KYC and AML might not be quite as readily available as it would have been at the beginning of the transaction. So that's definitely a part of it as well, I think.
Yeah, very valid points. And again, as Mark said, it's just about being open and transparent. And every solicitor that works with investors is used to dealing with that scenario. And it's nothing to be ashamed of. It does happen on plenty of deals. And again, as long as you sort of provide that information or the heads up, we can always sort that out.
Yeah, agreed.
It is a changing market, in my opinion, because we are seeing more and more investor finance. I would say probably 60-70% of my deals, refurb deals, have investor finance. But what we're also seeing are things like delayed completion, lease options, all different mechanisms trying to give the investor a little bit of an advantage in a market where buy-to-let has become almost unworkable. So are you seeing more of these things now, Avi?
Yes, definitely the phrase value add is becoming more and more relevant, particularly with the most recent budget, the hike in SDLT. Obviously, we've not quite yet seen the impact on that, but I've already had a few deals that were sort of in legals before the budget that have gone off or certainly are being renegotiated. Who knows? I have a feel that there's going to be a bit of a depression in property prices, which will kind of make up for the stamp duty. And well, I'm not sure whether we'll be in that much of a different space with the buy-to-let. Different views out there on where interest rates are going. Speak to your local financial advisor about that. But I mean, there is definitely factors that are making different sort of more riskier investments, but investments that can produce more than kind of what you'd get as an income return on a buy-to-let are going to be popular again. I've seen a huge amount of HMO deals in the recent sort of 6 to 12 months. Those have been very popular. Before that was the permitted development deals. So a lot going on in the residential sector beyond purely buy-to-let. As you touched on, Mark, a lot of people are paying very close attention to short leaseholds. With the potential changes to legislation, again, we're not quite sure what those are going to be and when those are going to kick in. There's a feeling that there's quite a lot of value with short leaseholds, because if they do remove marriage value and change lease extensions to 999 years, people will, in theory, be able to pick up short leasehold properties at quite a deep discount, as you would at the moment, and be able to extend their leases for significantly less than might currently be the case. So yeah, definitely a space to look out for. Those are probably sort of 2 or 3 areas that I've seen the most increase in volume of types of deals.
And also on the lender side, Avi, are there certain lenders who you dread getting a case in from because they're more laborious than others, or is there some that you think, oh yes, I've got a case from X, Y, and Z, and this is going to fly through because we work really well in tandem with them?
If we weren't recording this, we could have an absolute whale of a time on this topic. Yeah, there are, but without going into names, I think there's sort of a couple of quite obvious differences between the easier lenders to work with and the more challenging lenders to work with.
Not challenger lenders.
Oh, I love challenger lenders. Challenging lenders, absolutely. A lot of it comes down to number of people involved in a process on a case. For me, the easiest lenders to work with have the fewest people involved in seeing a matter through from start to finish. Now, you might have a different view on that, Mark, and perhaps you, Ro, as well, but from my point of view as a lawyer, the less people I've got to explain a challenge or talk about a case to, the better, because I'm comfortable that once I've explained it once, it'll get dealt with and resolved. So that for me is a really that to me is like a hallmark of a lender that's easier to work with. Look, there's a vast array of lenders out there. Many of them rely on funding lines. Those funding lines can be very restrictive in some cases. And if the brokers or the borrowers are not clear on the parameters of which their lenders are prepared to lend, that really can make create challenges as well. So it's kind of almost really important that people do. There's a huge amount of lenders out there, Marc, Ro, we both know that. But if you go to the right broker who actually really does know the market, there's so much pain that can be eased by actually placing that business with the correct parties for a particular deal. And again, there's no point going to a lender with, a really simple structure who then can't handle complex work or a complex case. Transactions at undervalue. The whole name of the game is to try and buy something at an undervalue. Let's be honest. No one likes to say they're paying the market price or too much. But there's a number of lenders that the minute they see that, there's sort of this major panic. So it's about having lenders that, for your particular deal, can balance straightforwardness with the ability to handle complexity. And the real best ones are the ones that for me, that can do both, that have solid underwriters that understand the intricacies of property investment, but at the same time don't overload the process side of it.
Typically, how many...
Go on, Ray.
Right. Oh, thank you. I was just going to ask, just following up on one of those points. Typically, how many points of contact do you have at a lender as the solicitor who's representing their interests? Can it be a range of people, or is it typically just one person?
It's really interesting. In my experience, broker-led cases generally tend to have less involvement with the lender, and if you have a nice proactive broker who's following the case all the way through, the need for lender input should be less, which does make things easier, because if you've got a problem, you share it with your broker and they will hopefully deal with the lender and resolve those issues. So it does vary. You have some really big lenders out there that have obviously got their underwriters who you may have contact with, your BDMs who you may have contact with, your case progressors, and that's often a team of people rather than an individual, so you might get different people chasing you on each sort of different day. It's amazing. I mean, some of these bridging businesses have scaled up hugely, again, particularly since the credit crunch, when finance suddenly became quite hard to get hold of through mainstream banks. And I've seen some of these businesses grow unbelievably, and the numbers that they're doing are phenomenal. But sometimes from a pure service point of view, how can I get a deal through with a client the quickest tends to be quite often the more niche and the smaller understanding lenders that my clients will gravitate to.
Yeah, it's a really good point, and like you, I've seen the rise of the challenger banks and other lenders who have become quite cumbersome. When I deal with a case as a broker, if you look at Shawbrook's model, for instance, they have a sales desk that you start with. So you get an initial inquiry, you send it into the sales desk. The sales desk say yes or no, this is a deal for us. They're not always the most experienced of the lenders, so you don't always, in my opinion, get an accurate answer at that stage. So invariably you'll have to go to the BDM and then get another view. So you then speak to the BDM. When you then submit the deal, it will go to a lending manager, who is in essence an underwriter. They will say, yes, this is a deal for them, no, it's not. Then it can either be handed to another lending manager, who will have a lending officer who sits beside them. So the lending manager is the person who underwrites the deals, does the big decisions. The lending officer is the person who will chase through documentation and everything like that. They will also have SLAs. So a bit of information goes in. They'll have an SLA of, I don't know what the SLAs currently are for Shawbrook, but say 48 hours. 48 hours, they'll look at that bit of documentation. If there's documentation missing, that they'll request that information and that SLA will start again. So you keep going around with these SLAs. It will then be handed to the solicitors who they'll work with, whoever that may be. and they will have a completions officer who also will then join the process. So all the way through, we've been dealing with different people, and it's the way it works, but it's so much better when there's one person who deals with it.
Yeah.
For me, the best model is funded 365s, and I know you're not going to say anything negatively about anybody, but I can say good positive things about people. And funding 365 is great because, one, I get direct contact to my business development manager virtually whenever I want, and she's excellent at doing what she does. I also can speak to the underwriter direct, pick the phone up, and there's no SLAs. It is literally, can we do this? Let's get it going. And then that same team will look at it all the way through. And if I really need something, I can pick the phone up to the managing director who will help me. And the smaller lender is so much easier to deal with. And also, they're not a bank, so they have less regulation they've got to deal with.
Yeah, I will just name check one lender who actually, in a really positive way, used the size of their team with a deal that I was just doing now. Phenomenal. Hampshire Trust Bank, we did a portfolio refinance. I put it on the LinkedIn because it really was a phenomenal deal. 5 days from offer to drawdown. And there was an example of a 43 property refinance complex deal. And we really did need the full breadth of their team to be able to pull that off. And it was a brilliant piece of work by them. All credit to them as a lender. And I'm not on their panel, genuinely just sort of giving them a shout out because they did a great job. So again, I think it just comes back to this question of working with people, whether it's your lawyers, whether it's your mortgage brokers, working with people that really understand the market and, more important, understand your needs and what your portfolio or what your property really is and what your situation is, to make sure you get matched up with the best product and lender for you in that situation. I worked with a couple of brokers recently where they're just pushing the same lender the whole time. I can only think it's a commission-based thing. And part of me is crying out and saying, you're not doing your client any favours here. You're doing them a disservice. You're not actually doing anything other than acting as a front for a particular lender. And that's not the way property finance should be run.
That is completely true. And we go with the best lender that we can possibly find. And obviously we get paid a procuration fee from lenders. But I can't remember what proc fee I get from anybody. I always have to ask the lender what proc fee we're getting right at the end, because it doesn't really, it doesn't at all factor into any of my decision making. It's not something that I'm looking at any point other than when I'm sending an invoice to them at the end. So it is interesting, and there is an argument to say that there are potentially some brokers out there that don't do that, but it's an interesting thing, and we always try and deliver the right solution for our customer, whatever that may be. And often we see other brokers who don't do that. We see them that they're just trying to get the deal in, so they'll promise a lot up front and then not be able to deliver. We're very realistic with our customers, saying you will be able to do this or you won't be able to do that. And because we've been there, done it, we're usually pretty accurate in what advice we're giving. But then maybe a broker who's less experienced comes in and says, I can get you a deal 1% cheaper, and it will, with this lender. Then they'll find out later down the line that lender's no way going to lend because the circumstance doesn't work. And it's interesting to see. But Ro, as an investor, do you ever say, I want to use this solicitor, or do you just have to go with whatever the lender or the broker suggests?
A couple of times I've actually been given a list of panel solicitors, as you do with a valuer as well. So I've had that a couple of times now, actually, on a more recent transaction in particular, where I was given a couple of lawyers firms to represent the lender, and a few for the valuation surveyor as well. I was able to choose, but not always been able to be fair. Just depends on the lender, but it's good that they do offer that where they do.
Yeah, 100%. And the aim is, just touching on a point you said, Mark, and it should be the same for whether it's lawyers or mortgage brokers or anyone sort of involved in a transaction, that you're trying to create something that's relationship based. And you go and push a particular lender who may not be best suited to a particular client. Maybe their audit requirements or on a development, their monitoring costs are going to be much more expensive down the line. That's not how relationships flourish. And I was always told back in the day that it's 7 times harder to gain a new client than keep an existing one. And I very much subscribe to that mantra, and I think you do as well, Mark. Our existing clients are the most important. So to try and look for a short-term gain at the expense of a longer-term relationship, complete no-no.
Yeah, I agree. And Ro, as a investor yourself, the solicitor obviously plays a massive part of the transaction for you. Have you ever had times where the solicitor has made it difficult for you, or generally has your experience been that the solicitor has helped the process through?
Yeah, it's a great question, because I think one experience with a solicitor is not always going to be the same experience, when you keep using them on different deals, because their circumstances, their workloads, or the lender requirements, if it's a different lender, change as well. I think some of the most stressful experiences I've had during a transaction have probably been down to the legals specifically, just because it's you can't put that on any one particular party. It tends to be because of the legal requirements for the lender solicitor and the time it takes for that to be communicated to your solicitor as the buyer, for example, and then like the toing and froing in between. It just depends, because go back to my point earlier, you sometimes have an option to choose which solicitor firm you want to use, but I don't think it really makes a difference, because it comes down to the individual team that are handling that transaction, their processes, how big that firm is, whether they've got paralegals who are kind of doing the day-to-day inquiries. And we've spoken about this before, because quite often the most frustrating thing can be when you're asked to provide documentation about something at the last minute, where you already would have provided it earlier on or up front, or actually you just get given a completely new requirement issued to you right at the end of the process. And again, it's because actually there's been a more junior or paralegal that's looking at it at the early stages, but then it goes to final review with somebody who's more senior, a partner, and then they say actually you need X, Y, and Z as well. But obviously, if you don't understand how the process works and how that firm is configured, you're never going to know what that experience is until you're actually going through it. But that has often resulted in transactions being stressful down to legal specifically. But as Avi has mentioned, there are a number of things you can do up front to gather all your documentation, to centralise it, and have everything there that you think is going to be required, just to sort of minimise that kind of rush that mad rush panic at the end.
I would just add to that, Ro, that I think you highlight also a really undervalued part of the whole process is having a solicitor acting for you as a borrower who really understands property finance, and particularly if you're bridging short-term finance, because the reality is you're likely to come up against inexperienced solicitors or paralegals, more junior solicitors for particularly the larger lenders. Ultimately, that is the way many law firms make money, because they're on a fixed fee scale, which using qualified or experienced solicitors may not be profitable. The role of your solicitor is to be proactive, understand the requirements, but sometimes challenge them in the right way and say, well, hang on, you don't need this. You don't need to be asking for this at the 11th hour, because it's either been provided previously or isn't relevant to the transaction, or could be dealt with as a condition subsequent. We had a situation this week. We had to draw down before the budget. There was a minor issue on an insurance policy that was provided, and the client would have lost several £1,000s if we'd have allowed the lender's solicitor to have his way and delay completion. We managed to deal with it by being completely open and say, yep, it's an issue, but it can be dealt with 2 weeks following completion. Another deal we had where there was a gas safety certificate missing as well. It's about understanding the issues and then knowing how to deal with them. And I do find, particularly when I've got my lender's hat on, I'm often dealing with perfectly good conveyancing solicitors who just don't understand how short-term bridging lending works. And that causes almost more frustrations in a deal than anything else. Just the lack of sort of knowledge of that sector.
I think that's a great point actually, because even if your solicitor hasn't got experience of working with that particular lender, knowing that they've got experience of working with different lenders, and that pragmatism makes a massive difference. Because I had exactly that as well, where on a recent transaction where a number of documents and expectations were being set quite late on, but it was unreasonable to assume that they could actually be delivered prior to completion. So to having that credibility to say, actually, you don't need that now, but if you really do need it, we can do that. Exactly as you said, Avi, within 2, 4, 6 weeks or whatever it is, post completion. So having that experience is key. How can investors and developers who are perhaps looking to change solicitor, how can they be better placed to pick the right sort of legal representation to look after their interests when they're going through a property transaction, to better handle and manage those sorts of challenges efficiently?
Well, it's a really very, very interesting question, and a really hard one to answer, because I actually think that part of it just comes down to human chemistry. The starting point is finding someone that you get on with, who you feel is there to meet your needs emotionally, personally, and professionally. And property buying is stressful. There's no two ways about it. You mentioned a deal where you had a very stressful deal, and it was in the lawyer's hands. The fact is that the lawyers are almost the last ones before the deal's done. You're going to exchange contracts with that lawyer. So if they don't get it right and they're not looking after you, chances are that you're not going to be happy with the experience. So choose a lawyer that's on your wavelength. Personality is very, very important. And as we were just talking about, do a bit of research, have a look on their profile, on their website, go on LinkedIn, see what sort of work they've been doing and see if it matches with what you need. Because, again, there's no point going to a solicitor that's got huge experience of massive portfolio refinances all over his profile, when actually you just need someone that understands how to get a buy-to-let deal through nice and quickly and calmly with no pressure. Do think about the size of the firm that you go to, because there are various lenders now that do have criteria. They want firms with, let's say, 5 partners or PI cover of a certain amount. I think all solicitors need to carry 3 million and above, but there are certain lenders that set the threshold a little bit higher. So speak to your lender early on just to make sure if they've got any criteria. I also think that often people go to a solicitor, and it's very important to have your own solicitor, but that some deals are quite straightforward. Do speak to the lender to see if they're happy for their solicitor to act on a joint basis. I do myself out of work quite often, because a client will contact me and say, I'm doing a loan with, I can't remember who it was. Maybe it was Foundation Home Loans. No, probably not, because I'm on their panel. But there was a lender I'm not on the panel of. And I said to the client, go and check if the lender's solicitor will do joint work, because it generally will be cheaper and ought to be quicker if it's done properly. So, don't be embarrassed to ask the question if it's right for that particular deal. If it's a more complex deal, you probably want to have your own representation. But just think about what your different options are. So, experience, size of the firm, and do they fit with you as a person? I think are 3 really kind of key considerations.
That's some great advice there. Great points.
And on you mentioned emotion earlier on, and emotion does play a big part in it, and especially if you're doing, say, a development deal where you're in that transaction with that lender for probably 18 months, and emotion will, there'll be peaks and troughs in emotional state, shall we say, and the solicitor also will play a big part in that. There's money that needs to be released at different stages. There's all types of things that need to go on, and having a solicitor that you get on with on an emotional level is integral to a smooth process. If people are pulling in the wrong direction or you don't get on with somebody, 18 months is a long time, and when money's involved, people lose tempers, people get around a bit frayed around the edges. It's really important. So the creating that team that you can trust and is working in your interest is massive in any transaction.
Yeah, and sometimes you may need to pay a little premium for that, because again, if we're looking at different models of law firms, The ones that can offer their services generally at the lowest cost are ones who aren't investing in relationships and are seeing your deal more or less as a product, something that needs to effectively run through the conveyor belt, get it on at the beginning, off at the end, minimum of fuss, minimum of cost. And that's fine for certain people, certain deals, but most investors that I speak to and work with want something a bit more meaningful and a bit more two-way, so that if they do have a problem, there is someone they can speak to. And again, you may pay a little bit more for that, but I always say to clients, you've got to be careful what you say these days, but most people don't buy their vegetables and fruit in Aldi because they kind of want something a little bit more. And I think it's the same with your legal services and frankly any professional services that you're going for, and mortgage broking services. Go for people that you might pay a little bit more for, but you'll get that back in spades because you'll have someone that's your friend on the deal and not just someone that's going to just try and push it through as quickly as they can without really caring for your needs.
And it's the same with the lender you choose as well.
Very true.
I always use the analogy of boats with lenders. And when I used to work at Lloyd's, we used to say that Lloyd's was like one of these big super tankers that was always going steadily forwards, but if you tried to change its direction, it took a long time, and getting things agreed that was outside of policy, probably not going to happen. Then back in the day we had Shawbrook, who we described as a bit of a catamaran. When they first launched, around 2013-14, they were quick, nimble, they could move quickly across transactions and really try and give you a good experience. And then we had lenders like another one of my ex-employers, the Bank of Scotland. We described that as a speedboat without a driver. That was literally all over the place, wanted to make gains as quickly as possible, but potentially didn't know where it was going. And we saw what happened there. So picking your boat, which one is suitable for your journey, is really important. So a broker and a solicitor will help you with that. They'll tell you what the process is like and what's needed along that journey. So it's important to engage early with solicitors, in my opinion.
Yeah, 100%. And good solicitors also will add other value to your deal. They'll be able to give you an opinion on areas that you might not necessarily have gone to them for. They might possibly know of other sales that have gone through in that particular area if you're buying something, of challenges that people have had with a particular lender, they might know a helpful surveyor if you're struggling a bit on the valuation. Again, choosing someone that can add value to the relationship, it's just crucial. It's crucial for successful property investors.
We actually added value today. I should mention this to one of our new customer coming to us. They said that they want to do a refinance of a property and they want the flexibility, but they don't want to pay bridging rates. So they wanted to be able to repay some of the debt. And variable rates at the moment, so they've got a low yielding property, so variable rates at the moment won't get them to the level of leverage that they need to get to. So they've got a freehold block. But we said to them, well, instead of thinking about whether it's bridging or long term, what about splitting the freehold into separate titles, into leaseholds, so that then, if you get some cash in, you could repay one of them and have less of an early repayment charge. So you're not paying an early repayment charge on the full debt, you're just paying it on 1/5, i.e. one of the 5 properties. And it makes it a lot more palatable for them. But I don't think a lot of brokers would think like that. I think they would just
that's
go,
great.
MUFB, multi-unit freehold block, stick it in with the lender that does multi-unit freehold blocks, and away you go. But the added bonus of what we've suggested to them also gets them a cheaper rate, because individual buy-to-lets are cheaper than multi-unit freehold block deals. So hopefully we've added value to our customers, and it's only because we've been around a lot and we've spoken to people and we know solicitors that can do that at the same time as completion of a refinance, that we know that it could work for them.
Yeah, absolutely. And again, obviously everyone's circumstances are different, but broadly speaking, as long as you grant those leases to a group company, it's SDLT neutral. You can grant it at full premium, so you don't need to worry about undervalues and challenges from the lender in that respect. And that's a really good strategy for realising value out of a multi-let freehold.
Yeah. So, good. Right. Well, we're getting up to about time when we need to go. I've not had any lunch, so I need to go and eat at some point. But it's been a pleasure talking to you, Avi. Just before we go, is there any one nugget that you could give people that they can take away with them to make their journey, maybe for somebody who's new to property investment, what could they do to prepare themselves the best?
If one word, listen. None of us know it all, but get the right people around you and be prepared to listen to what they suggest that you do, whether it's your lawyers, your brokers, people that you're talking to professionally about what you do. Just be a sponge, take it all in, and the more that you're prepared to take on board, both in terms of what you need to do, in terms of getting deals through, but also advice that people give you, assuming it's the right people, you'll never regret it. There's so much knowledge out there, and it's just a matter of connecting with the right people to try and tap into it.
Excellent.
What about you, Ro? What do you advise professionals working in the property sector? What are you looking for? What's the key to us working best with guys like you?
Yeah, I think communication is a key one, actually. And it very much ties back to a point you made earlier about the chemistry. Get to know the people that you want to partner up with. Make sure you've got that rapport and you feel that you can contact them when you need to, and have a good, clear communication sort of approach, because there's nothing worse than working with somebody who doesn't come back to you or doesn't respond, and because you haven't gelled or don't have that chemistry, the communications or lack of communications are the things that cause hiccups or stress. So that's definitely my tip: build those relationships and know who you're working with.
So I'll give a tip as well then, if we're all giving one. I would say stalk people on the on social media. Make sure you know who you're dealing with. Watch them for a long time. Make sure you're not just, somebody says go and deal with this person. Have a look at them. Look what they're doing. Look who they're talking to, the types of transactions they're doing. I think you mentioned that before, Avi. But look at if they're on social media, the content they're putting out, how they're trying to guide people. Are they trying to come up with, strategies that push the envelope a lot, which, high risk strategies, or are they people who are trying to actually make deals work and make them work efficiently and educate people and help people? So do your research, watch people for a long time, and then make your decisions off the back of the research you're doing.
Love that. Yeah, makes a lot of sense.
Right.
Great stuff.
Brilliant.
Yes, well, thank you,
Thanks
Avi.
very much.
Thank you, Ro.
Thank you, Avi.
And
Thanks,
Yeah,
Ray.
mate,
Thanks,
great.
Mark, for inviting me.
No worries at all.
obviously-
And we'll be back this time next week for another Facebook Live. And you'll be able to find us on YouTube at Show Me the Money, Unlocking Property Finance YouTube channel. Please subscribe and share if you can. It will help us out. And thank you all for tuning in.
Thanks
Great
again.
Cheers, everyone.
That concludes another episode of Show Me the Money podcast, Unlocking Property Finance. Connect with us on social media, where we share additional tips, resources, and behind-the-scenes insights. Feel free to reach out to us with any questions or topics you'd like us to cover in future episodes. Until next time, keep exploring, keep learning, and keep making those smart investment moves. This has been Show Me the Money, Unlocking Property Finance.